Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, July 1st, 2009. Well, today is the start of the third quarter of the year, and we did have a nice move up in the markets across the board. You've come in a little bit, as you can see on your intraday chart here. Again, you're looking at your intraday SPY chart, but the key today was oil initially, and ExxonMobil and Goldman Sachs. Now, we know Goldman Sachs and Exxon really are the leaders in this market. They continue to be that way, and we saw a nice push up initially on oil this morning into oil inventories at 10:30 a.m. At that point, inventories came out and the oil market just collapsed. However, because of the propping and continuous light volume in this market, the market really was able to hold up based off of ExxonMobil and Goldman Sachs having an underlying bid. And I want to show you this exactly. Take a look at the USO. Look at this drop on the USO today. It's just been dropping all the way actually down into some nice support down here. You have a very, very good area of support here at around 37.30 on the USO. For those of you that are scalpers out there, probably a good area for a bounce on this USO. But the bottom line is this. You see the drop in oil. Generally, when you see a drop in oil like this, you should be seeing ExxonMobil coming down very hard. And ExxonMobil has not come down as hard as oil. In fact, take a look at this chart. ExxonMobil still up almost $1. Did roll over a little bit on oil, but has now stabilized based off of light volume. And for those of you that are in the chat room, for those of you that are in the research center, premium subscribers, that is, you guys know we've talked a lot about how volume on this light holiday week is going to be very much geared towards the upside as propping is coming in. And what are you really talking when we talk propping? Really what you're talking about here is underlying bids being put in from anywhere from hedge funds to mutual funds to fund managers to even as much as the Federal Reserve and the PPT. For those of you that believe in the PPT, well, there's nothing to believe anymore. It is stated as a fact now that it exists. But long story short, there's a concerted effort by a lot of key players out there to hold the market up, and they can do it very, very easily when you're dealing with light volume. So you can see it true enough today, where yesterday or last week or last month, if you had a drop like this on oil, the markets would be negative across the board. Instead, today you're seeing the markets having a beautiful up day. The Dow is up 95 points, Nasdaq up 20, and the S&P up about 9 points, really about 1% across the board. And that again is focusing on the fact that the light volume is giving the upside bias to the market. You always have to have an upside bias when you have the markets trading in this manner. Okay, let's go back to the spiders, take a look at the intraday charts, because you're in fact seeing a little bit of a move up here inside of this red candle. And those of you that have stuck with us on technical trendline analysis and price pattern and time, which again, that's our holy book we follow, we teach to our subscribers, our premium players out there, you can see that this could be a little bit of a start of a bearish pattern development with a lot of support right down here at around 92.75 to 92.70. All right, so you do have inside candles inside this red candle right now. That could be telling us there's a little bit of a negative bias here, but very, very minor downside support. All right, and I mean that in a real way of saying that on the downside here, there's just a minimal amount you're going to fall. I don't think there's a lot of downside in this market today. I don't care if oil drops another $1 on the day. You're just not going to get a lot of downside because of the propping going on. Light volume buyers are out there, guys. I mean, it's just the way it is. You can see from really March when the market bottomed, after we got off those lows, volume dried up, and the markets have not been able to fall. You'll fall one day, you'll fall 2 days, you won't really fall 3 and 4, and you'll find yourself right back to the higher levels a day or two later. It's just the way it is right now, based off of this mysterious support levels coming in and support buying coming in to prop the markets up. So when we talk about propping, you can see it exactly today where ExxonMobil did it to a T. All right, when oil dumps basically from a move up here all the way down to levels where you're making a double bottom from yesterday, and Exxon is not making a double bottom, there has to be something taken into account there, and exactly that. So again, I'll show you the USO chart. Take a look at that dump on the USO. And by the way, I just called a bounce play right here as a scalp play. Look at the bounce you're getting, and I just called that out for those of you, obviously, that are in the chat room. You'd know to do that. I did highlight this area in the chat room for our members. And again, it's just proving to you guys our abilities out here, and that's really what I want to show you. Give you a little snippet of our abilities in technical analysis and calls and so forth. Okay, next up, guys, let's talk about Goldman Sachs. All right, no sooner, and this is key, guys, because this is another sign of propping going on. No sooner did oil inventories come out and oil start to drop and ExxonMobil started to tank, then all of a sudden, mysteriously, Goldman Sachs started to break out to offset the drop in ExxonMobil. And you can see right here at 10:30, breakout on Goldman Sachs, and now you're trading in a sideways pattern. And again, my point here of showing this to you, you have to understand what's going on to understand exactly why the market's behaving in this way. And again, holiday week, July 4th, 4th. They're not going to let the markets go down into this weekend, guys. Too many people are looking to travel, to spend money, consumer spending. In addition, the other thing I'd like to bring to the forefront of this video is that you have to really understand that we've had a lot of economic data over the last 2 weeks, and it has all been ugly. I can't stress that enough, guys. The economic news has been just absolutely ugly. All right, you had news this morning on ADP employment, ugly news. Home sale news this morning, pending home sales at 10 o'clock, 10 a.m. Eastern time, ugly. All right, and my point of bringing this to the forefront is just to illuminate the idea of the propping going on here and to understand it fully. But listen, it is what it is right now. Understand it. You trade with it. That's the bottom line. I don't care if someone's propping the market or tanking the market and they're pounding it, if they're short covering, whatever it may be. Markets can go up tons, down tons. There's always a way to make money behind it if you understand, and that's what we're here to do. Okay, next up, folks, please understand the situation in addition to that of the charts. You got to understand your levels, your trend line analysis tools, and everything. And what you can see again is you had resistance up here at this orange line. Now, this orange line was very, very important going back multiple days, and this is one of the key levels we had highlighted in our charts to our premium service members. And even I think we had this in intraday. We didn't really explain it as much, but you had to understand that this was a major level starting all the way back on the 25th of June. So you take this line, connect it to the lows, and just drag it up. And you finally broke to the downside once you broke below there on the 30th of June. So right here you break down, you have a nice drop down, you go right to your 200 moving average and this trend line at 91.40, and that's exactly where the bottom of the market's put in. At that point you start to rally back up, and then take a look at this. The orange trend line comes right into play here and touches, and that's the top of the market. We alerted our chat room subscribers to look for a scalp off of that level. Look at the scalp opportunity. You even could hold this play, and look at the fall it came off of that level. Really a great level, great alert in the chat room. And again, we isolate this stuff in the nightly videos for the Research Center subscribers. So again, it's much cheaper if you're not a day trader to just join the Research Center and take advantage of the calls based off of that as we set you up for the coming day. And again, you can start to look for levels. In fact, we're looking for possible short plays going into maybe the next few days. We'll have to see how that works out based off of the rest of the day. But again, you want to be pertinent. You want to look for that information in the Research Center, whether or not we're going to do it, or we're going to see certain signals that are going to keep us away from doing that. And again, we'll alert our subscribers to that tonight and tomorrow as well as we go into the end of this week. Again, Friday, the markets are closed for the July 4th holiday. So again, you have inside bars right here. You have resistance at this orange trend line. If we were to make a new high and push up into that, that would be good resistance. Obviously, you have minor resistance right here at this dotted line from previous lows right at 93. You can see we broke that 93 level, then came up and tested that before rolling over. That 93 level was tested. Then we dropped right down here after breaking the 20 moving average, and you're just hovering above very, very solid support at 92.70 to 75. Inside bars right here dictate we may have a minor bearish pattern developing as well to watch. However, as I said earlier in the video, guys, you don't want to look to short this market very much into the close today. You just have to understand what's going on. As I said, when you have bigger entities out there with many, many billions, if not hundreds of billions of dollars more to put into propping the market up, why would you go against them? It's like me going up against Michael Jordan in a game, or LeBron James. It's just not a smart move. If I'm going to bet on myself in that game, it's probably not the smartest of moves. And that's really the underlying facet of what you want to do here. So again, if we come down, you look for a lot of support right around 92.70 to 75. If that breaks, then you could easily see the 92.50 level. I don't think the market goes much below that unless we really start to see a major, major decline in oil. I just don't believe it, though, in this environment. There's no more economic news. You trade pretty much mostly, we talked about this yesterday, you're going to trade sideways into the close today, and that's really the general thing you want to look for. Like yesterday, same thing. We had a nice dump early, then the market traded sideways to up. Today, nice push up. Instead, now we're trading sideways on the market, slightly down, but it wouldn't surprise me to see us tick up a little bit later in the day as well, especially after we test some key support levels. All right, that's pretty much all for today, folks. Again, come join the Research Center. Come join the chat room. Very easy to get in touch with that and really focus on the key technicals, trendline analysis, price pattern, and timing of the markets. Really learn it. We guide you. We really hold your hand in understanding the markets in that aspect. Come join. We hope to have you aboard. Have a wonderful rest of the day. Take care.